What is going on, guys? Good afternoon. Good afternoon. It's your favorite mortgage lender, Adele Kwame. What is going on with interest rates? Man, have we finally really reached what we were looking for in terms of interest rates, in terms of a slowdown with inflation, in terms of a slowdown with employment? We're going to dive deep. This week is going to be a very heavy inflation data week, but we're going to cover first what happened last week in terms of the employment data week and take it from there, right? So, again, the main thing we started seeing was a real softening in terms of the revisions from the headline numbers. I mean, it is mind blowing how sometimes these numbers that come in with employment come in so high, and then the following month they revise it to a lower number. It literally makes absolutely no sense in regards to how they keep coming out with these fictitious numbers. We also saw the private sector, which is measured off of the ADP report, also show a little bit of a shift in terms of forecasts. We have job openings at the same time that started to tick down a little bit in January, which is great. We saw a little bit of continuing unemployment claims starting to go as high as 1.9 million. That means that almost 1.9 million people are having a hard time finding a job, and they are continuously asking and requesting for assistance. And then we have annual home price growth. Again, we saw some updates with Case-Shiller and Black Knight that show some appreciations. So we'll dive right into it. So again, the BLS report, the BS report, it is consistently the BS report. So it showed that, again, there was 275,000 jobs that were created in February, which is stronger than almost 200,000 jobs of what the expectations were. But check this out. They revised December and January. They cut off 167,000 jobs, which means that they were basically wrong by 167,000 jobs. Not a few hundreds or a few thousands, 167,000 jobs, marking the first increase for unemployment since October, which is huge. Okay, so again, the headline growth again beats estimations. Future revisions again lower are a possibility and more than likely will probably happen again, and we're going to see a lot of different fluctuations where the business survey also shows when we talk about inflation and we talk about the influx of new jobs and also jobs that are being lost, we're starting to see that within the readings. So again, remember, the Federal Reserve hiked interest rates 11 times, okay? And they did it in the most aggressive fashion. So we want to really make sure what exactly is it that the Fed's goal. They have paused in their last four meetings. They're meeting again next week. And then we're going to start seeing what indication they have. If inflation comes in good this week, I think we should be in a very good position to be able to start setting proper expectations in regards to that. Then we talked about the private sector. Private sector is measured by the ADP report. We once again saw a little bit of an uptick. They added 140,000 jobs versus 150, which is great. Now it's beat a little less than expectations. And again, the job gains, although they still remain a little solid, we're continually trending lower. We're starting to see only an increase average of 7.6% with new jobs being created. In terms of job openings, once again, this is off of the JOLTS report, also simultaneously decline, meaning less jobs are out there that are currently being made available. With a lower revision, remember, we want unemployment to go higher, we want less jobs to be created, and we want inflation to go down. And that is kind of a little bit of the tease as to what we received when we were talking about that. Now, the number of job openings that we are receiving at the same time is showing that it's weaker than the headlines, which means that it is suggesting that these numbers that keep coming in, the Fed will continue watching the report and hopefully monitor if there's any information really or flaws in the data. Continuing jobless claims. So we saw 217,000 jobless claims were created, but this is the part we really want to keep an eye on. I mentioned it earlier. The new continuing claims, or I should say the continuing claims, is now close to 1.9 million people still receiving benefits, okay? So that is continuously trending higher. It's the highest it's been since November of 2021. And then once again, we saw home price growth. Black Knight again showed that home values increased month over month and showed that it increased 5.6% higher than the previous year. CoreLogic, once again, of course, showed a little bit of a decline, but then showed almost a 5.8 overall year over year gain in terms of appreciation. And then what we're looking forward to today, to this week, guys. So again, in terms of this week, we're going to get a lot of inflation data. So tomorrow, I mentioned it in my video, we're going to get consumer price index, the CPI report. We're going to start seeing how have people been spending their money really after Christmas has gone away, after some of the new year has gone away. We've been seeing a lot of layoffs at the same time. Has that finally gone ahead and impacted consumer spending? We're also going to get the PPI report, producer price index, which measures wholesale inflation. And that's going to give us, again, a detailed insight in regards to what's the cost to make things and is it starting to decline. Okay. So, though both of these reports, if we recall, came in slightly hotter than we wanted to earlier last month. So, we really hope that we get a little bit of a rebound. Then, something that might affect the market a little bit, we'll get the retail sales numbers for February. And then we'll once again on Friday get an update in terms of just manufacturing and stuff like that. So, where are we in terms of interest rates? Interest rates are trending a little on the lower side. Today is actually the first day from what I was looking at earlier that they actually took a little bit of a turn. Let's kind of check it out. Yeah, so we have been consistently on a decline for quite some time. Where if we go back basically, let's say from March 1st, 2024, you'll see we finally went and we hit that sharp decline of rates. And that's mainly attributed towards inflation coming in, unemployment coming in lower. So we're kind of teetering right now at roughly 6.87. We're almost as high as like 7.5 at one point. We took a little bit of a turn now and dropped by almost 75 basis points. So I'll keep you guys updated as always. Hopefully this will continue on this trend. I'll obviously shoot some updated videos and we'll take it from there. Thanks, guys.